8 episodes, dozens of data points, and one massive shift in how we look at our money. We have spent the last 2 weeks dismantling the autopilot myth. We have seen why the old school passive SIP is failing, leaving investors with gains that don't even beat inflation. We have fought through the noise of Venezuelan crisis, the 50% Trump tariff, and the AI disruption. Today is the finale, the conclusion. We aren't just looking at charts anymore, we are finalizing our 2026 master plan. Before we move on to the next chapter, let's lock in the strategy that will define your wealth for the next decade, or at least for the year 2026. Throughout this series, we've been testing one core hypothesis. Is an active strategy objectively better than a passive SIP in 2026? Let's be realistic. Over the last 2 years, a set it and forget it path has been a struggle. In 2024, a passive index investor saw a merge 2 to 3% return. By 2025, even as they were told to keep calm, a 1.5 lakh crore FI exit left them with a nominal 4.9% gain. After inflation and taxes, the real wealth didn't just stall, it effectively shrank. That is the quantifiable reality of the passive investor. We haven't just guessed that an active pivot would work. We tracked the math as it happened. While the passive crowd followed the stay the course mantra, they remained overweight in sectors where service margins were being squeezed by tech advances or facing massive supply gluts. By proposing to move out of those traps, we sought to preserve the capital before the next slide. By reallocating that fat into the sectors best placed for fundamental breakout, we are positioning ourselves where the numbers are objectively strongest. We aren't promising a dream or weaving fiction. We are proposing a pivot based on ledger. The goal is to stop operating on hope and start operating on the data that the passive index simply ignores. We started this journey by trimming the fat. We identified the sectors that are no longer growth engines, but anchors: IT services, oil and gas, and textiles. We cleared this deadwood for one reason: to fund our offensive. Then we moved on to the core growth phase. This is where we ramped up based on hard evidence. FMCG, the financial fortresses banking, and the 15% Chaos Hedge, which we followed up with 2 Moonshot Opportunity episodes. And that brings our total 8 episode 2026 strategy series to a close. We have built this entire blueprint on hard fundamentals of the market and the very real turn of events we see unfolding globally. But as we move from planning to execution, we need to be clear about our roles. My job is to help you read the compass, to identify the threats before they hit, and point out the opportunities before the crowd sees them. However, the final master of your investment journey is you. Every trade, every allocation, and every exit is your call. So please take this data and invest based on your own conviction and your own risk appetite. If you have missed any of the steps we have taken, from trimming your portfolio to entering or identifying the new ones or the moonshot opportunities, please go back and watch the full playlist. This is the year we stop gambling on hope and start winning on strategy. Thank you for tuning in throughout this series. I hope you stay active, stay sharp, and stay stronger than the market. And I'll see you in the next one.